Boom. All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, I want to talk to you guys about the Halloween market crash of 2020. So I'm sure all of you are familiar with this at this point, but the markets fell off a freaking cliff today. Equity indices saw their worst day in months. Bitcoin and the cryptocurrency sector were hurting as well. Even safe havens like gold and sector got roughed up pretty heavily today too. Okay, so red across the board, aside from the US dollar and the VIX, which we will talk about a little bit today. But it was a rough one, and a lot of the news outlets, a lot of the media outlets are attributing this to COVID cases rising and potential lockdowns, which I do definitely think will play a factor. But I also want to share with you guys what I think the primary reason for this pullback is and what I expect to happen from here. All right, as always, we'll go over each topic that we're going to be discussing, and then we'll dive into each one individually. In front of us, of course, TradingView, I have the SPY open, so the S&P 500, the ETF for the SPY, or for the S&P 500 at least, the SPY. I do feel like this is the most middle ground between the Dow Jones and the NASDAQ. Not super tech heavy, not super legacy, but right in the middle. So this is the chart I will use to just talk you guys through what I'm thinking in regard to equities overall. All right, and it's looking a little grim. I will say that right off the bat. Okay. But I will give you guys a quick TA there. We will also, like I said, take a look at the VIX, which is the volatility index. This is pretty much directly negates. This is a direct hedge to the S&P 500 specifically. And then we'll take a look at the dollar. Okay, so a rising dollar, as I say this a lot of the time, you guys said this many times in the past, a rising dollar is bad for everything aside from the dollar. So every asset across the board, that's why everything was red today. A rising dollar means weak assets, means weak equities, means weak Bitcoin, means weak gold, everything. Okay, so take a look at the dollar as well. Those are the only three charts we're going to be looking at today, because I do want to focus primarily on the fundamentals and just let you guys know what I think about the macroeconomic backdrop at this point in time. Okay, so that's the chart. In terms of, again, summarizing just some of my thoughts here, I do want to read you guys the intro to this morning's newsletter. Again, I like reading these for you guys just because it sums up my thoughts, again, on the macroeconomic backdrop pretty shortly, and I'll add on to this if I feel like it's necessary. But again, in these I do some of my thoughts pretty well. So we'll kick it off with that, and then we'll go over an article that I actually mentioned in the newsletter talking about Dow sinks more than 900 points for its worst drop since June amid a rising virus cases globally. So again, a lot of the headlines, if you look at across a lot of the media outlets, these are a lot of the headlines look like this. Okay, it's attributing this pullback to COVID, and again, that could be the primary catalyst, but I think I don't think it is, and again, we'll talk about that in the newsletter in the intro. Okay, but there are a lot of good points in this article that I want to look over with you guys, so we will go over a few paragraphs in this, and this will segue us into earnings. Okay, so the final thing we're going to take a look at is earnings. There's a lot of huge earnings coming up. Okay, so you can see here just right off, Apple and Amazon, I mean, two largest companies by market cap in the entire world, just right at the top here, announce earnings tomorrow. This is a huge day for the markets. Okay, and this could be very pivotal in how the markets move from here. Okay, so I'm definitely keeping an eye on this tomorrow as well. Facebook, Samsung, Alphabet, Google, literally the largest companies in the world, the FANGs, are announcing earnings tomorrow. Okay, so this is something that is very crucial. I will be keeping a very, very close eye on the markets tomorrow. And if these guys don't impress, then I think things will look grim. Okay, so I know I said the technicals on the SPY look pretty bad, but if these companies right here, which because the S&P 500 is market cap weighted, if these companies start to excel tomorrow, that will bounce us up almost immediately. Okay, and you can see right here, futures are looking good at the time of recording this. It is about 3 o'clock Hawaii time, so I mean, you're gonna have to translate that to whatever time it may be for you. Futures are looking good right now. Again, Bitcoin and stuff, as you can see on the watch list right here, are looking decent. Dollar is actually going down. Bitcoin, gold, and silver are flat, but going up a little bit, getting green. So I think it's likely we'll see a bounce. Today was, again, we fell off a freaking cliff today, so it wouldn't surprise me if we saw a bounce. But in terms of fundamental catalysts, it's not only COVID, it's not the case, it's not the election. Earnings will inevitably play a part too, especially when it comes to equities. Okay, so excited to get into some of this stuff with you guys. As always though, before we do dive in, I will ask you to please give the video a like if you go on to gain value from it. Subscribe to the channel if you're new around here, want to catch more content like this, and of course check out my complete portfolio daily newsletter. First link in the description if you want a complete breakdown of my entire portfolio. I do update that every single trading day during market hours, and with every update I send out an email newsletter rationalizing my thoughts. Okay, so with every trade I rationalize my thoughts, and it's not only, I don't only talk about my trades, I talk about like this is a newsletter. So we'll talk about the newsletter. Again, you guys, if you want one of these bad boys in your email inbox every trading day during market hours, real-time updates from myself, first link in the description. Really appreciate it if you do. If not, no worries. Let's take a look at the newsletter. So again, I'll just read the intro, you guys, and a big shout out, you guys. I know if you are part of the subscription, if you are part of the newsletter, I've been reading a lot of these, but Trust me, I won't. I'll never scroll down further than this. That's exclusive to you guys. But I just feel like I do want to share this information. So thank you guys for understanding that. I thought it was a Wednesday. You'll like this one. I thought it was Wednesday the 28th, not Friday the 13th. A little cheesy there, huh? You guys like that? It's been a while since we've seen a day this bloody. Every asset across the board, equities, cryptos, even validated safe havens like gold are being punished today. This is a less extreme version of what we saw back in March, but it's still a liquidity crisis. When people get scared, they want dollars. So again, a liquidity crisis like we saw back in March when everything just fell off a cliff and was tumbling off a cliff for a while. That was a liquidity crisis. When there's fear in the air, when there's general uncertainty there, which I really think that is just the primary attribute for this. I don't think you can attribute this pullback to a single thing. Like, that's why I say COVID. Although it is a catalyst, although it is a factor, it's not the primary factor. And I really don't think anything is the primary factor right now, to be honest. But again, there's a lot of uncertainty in the air. There's a lot of fear in the air. You can feel it. And when people get scared, when investors get scared, they don't want equities. They want cash. They want liquid, okay? That makes them feel safe. Even though the dollar is declining, which we will look at once again, they still want dollars, all right? And that's why we saw a pop in the dollar. Another factor that's irritating me is all the news outlets are attributing this pullback to COVID cases. See screenshots below. Again, we'll take a look at this article. I understand the resurgence in cases is serious, but I don't believe that's what's causing all of this turmoil. I think that investors are scared of other investors being scared. So I'll repeat that one more time. I think that investors are scared of other investors being scared. It's a strange type of game theory that heavy levels of uncertainty always bring to the market. It's important to understand this and to act accordingly when it happens, okay? So, again, I think that again, you guys keep in mind the market is so psychologically driven. It's all game theory. Really, that's what the market is. It's so weighted on psychological on the psychology of the market, of other traders, of other investors, okay? And obviously a lot of people are anticipating what other investors are going to be thinking, okay? And you end up in this very weird cycle. Again, it's game theory in a sense, because a lot of investors are like, I'm not too worried about things, but maybe other people are, and that's worrying me about things, okay? And that's just a vicious cycle that, again, can tumble the markets. And keep in mind, you guys, once we see sharp drops like this, it's very, like, if you see a sharp drop overnight, it is very likely that a lot of people will be margin called out. If you guys trade on margin, you know exactly what I'm talking about. A lot of investors will get margin called out, have to cover their positions, go liquid, and that will cause the markets to drop further, okay? So we will cover that a little bit more once we look at the charts, but I just wanted to get that out while it was on the top of my mind. And yeah, so from a fundamental perspective, again, you guys, elections, COVID, we got cases going up, we have the elections coming up. The earnings are kind of here and there, which we will go over again a little later on. But there's just a lot of uncertainty, and uncertainty is never good. Uncertainty always means it always makes for volatility. Rough waters are to be expected, especially around this time. So it's a bummer. Again, if you guys lost today, trust me, I was not in the green today. But if you guys lost, just understand this is part of the game. Just keep your hands strong. Just keep your head up, and understand that volatility is a part of the game, especially during times like this. All right. So that's that. Let's go on to talk about this article. So again, there is a few things in here that I do agree with, and I wanted to share with you guys. U.S. stocks fell sharply on Wednesday amid concerns over the latest increase in coronavirus infections and its potential impact on the global economy. The Dow dropped 3.4%. Okay, so I highlighted this, but we just looked at it on the charts. The Dow, the S&P, the Nasdaq, the triple Qs all fell about 3.5–4%. That's pretty significant, you guys. Okay, it was a very, they fell off a cliff, like I said in the beginning of the video. They fell off a cliff as far as equity indices go. That's pretty severe, and it's interesting how they all fell pretty darn similarly, all like 3.54%. Okay. So bad news there. Again, surprise to nobody. All you guys know that at this point. Moving down, U.S. coronavirus cases have risen by a record daily average of 71,800 over the past week. Data compiled by Johns Hopkins University showed. Meanwhile, coronavirus-related hospitalizations are up 5% or more in 36 states, according to data from the COVID Tracking Project. Cases are also rising sharply across Europe. The recent uptick in COVID cases led some countries to reinstate certain social distancing measures. In the U.S., the state of Illinois has ordered Chicago to shut down indoor dining. In Europe, German officials agreed to a 4-week partial lockdown, while the French government imposed new nationwide restrictions until December 1st. So, again, you guys, I know I'm not saying COVID is the primary factor for the pullback. It's definitely a factor, though. If we're halting the economy again, and it's crazy that we're seeing this, and I don't by any means want to downplay the severity of COVID, you guys. It is very real, and I want to make that very clear that is what I think. But I personally also didn't think that we wouldn't go back into lockdowns, because to be like, I get it, but to be like, if it didn't work the first time, you guys, like, the definition of insanity is doing something over and over again, expecting a different result, okay? So I hate to pull out that cliche quote, but it's true. That's what I keep thinking. Like, if you keep trying to do something over and over again with the expectation of a different result, that'll come out differently, I just don't, it doesn't make sense to me. Again, everyone's coming from a good place. I don't think anyone has malicious intentions with locking down their economies. It just does it. To me, it doesn't. That's not the plan. That's not the call, okay? But moving on anyway. Sorry to get a little opinionated there. I think there's going to be a call for lockdowns, the likes of which we've seen in Chicago. Jim Cramer said Wednesday. It's a shame, because had there been stimulus, we'd be focusing on earnings, and earnings are actually pretty darn good. I don't know how I forgot about stimulus, you guys. So stimulus, that's like the main thing I've been talking about for the past few weeks now, and I forgot. That's definitely a factor. Okay, so that's a huge factor. Again, there's just so much going on right now, you guys. That's just the state of our landscape, of the macroeconomic backdrop right now. There's just so much going on, and stimulus, of course, is a big thing that I said. I said this not too long ago. I said this in probably a week or so ago now. That I think investors are starting to realize that it's inevitable that we will see a stimulus. It's not a matter of if, it's when. So no matter what happens in the presidential election, it's inevitable that we will ultimately see a stimulus. Again, Trump, Biden, whoever happens to fall into office, we will see a stimulus. That's 100%. Whether it comes before Thanksgiving, before Christmas, I mean, whoever falls into office, you gotta give people some Christmas money, right? If people don't have Christmas money, that's when the nation really goes upside down. Okay, go into the upside down. Shout out Stranger Things. Okay, but I mean, we need a stimulus, and I do think once again it is inevitable that we'll see it. Matter of if, not when. But again, it sucks that we're not getting it before election. I think a lot of people were optimistic. I was personally optimistic. I said that a lot of times. Now it's evident that we're not going to get it prior to the elections. But I think a lot of people were pretty bummed. But I mean, we knew that by Monday. We knew that pretty much by last week, that they didn't come to something before this past weekend, that we wouldn't be getting a stimulus. But now we're for sure not getting a stimulus prior to elections. But who knows how long it could be after elections. I'm optimistic once again that it's not. It will be shortly after our new president or remaining president, whatever it may be, is in office. Hopefully they put something together quickly and appease the American public. Because again, if you want civil unrest, give people a bad Christmas. Okay, so moving on, the CBOE Volatility Index. Again, we will take a look at that on the charts. Known as Wall Street's, as the market's fear gauge jumped above 40 and hit its highest level since June 15th. So again, sharpest decline, makes sense. Sharpest decline in the market since June in months. And the VIX is as a direct hedge. So that means it is inversely correlated. It does the opposite of what the S&P 500 does. It makes sense that it did well, okay? And shout out to the newsletter once again there. You guys, the VIX calls, a great way to hedge your portfolio, okay? So the reason my portfolio personally didn't just absolutely get punished today is because I'm hedged with certain calls on the VIX and certain puts on certain equity indices, okay? So that does help you. Again, you guys, I do have a video about that if you want to look about how I hedge my portfolio during pullbacks or something like that. But posted a while ago. Still, everything that I said in that video I still believe to be very true, and I still execute in my own portfolio today. So finishing it off here, investors' hopes that COVID pandemic would not force further stringent mitigations measures and or potential wholesale lockdowns that would push global economies back into low consumption mode appear to be coming under challenge, said Yusuf Abbasi, global market strategist at StoneX. Avoiding these stringent measures has been a major tenet of the bullish thesis, particularly for those looking to value stocks and for steeper yield curve. So what he said here is pretty much the thing that popped out to me. Low consumption mode. That's what everyone's worried about, right? Obviously, low consumption is not good for equities, for companies. The American economy wants consumption. The American economy is built on consumption, which, to be honest, you guys know I've been talking about Bitcoin a whole lot as well. That's why I like Bitcoin way more than equities right now, just personally, okay? Because Bitcoin is becoming a currency of its own. I view it as digital gold. It is becoming a currency, to be honest. But it's not prey to consumption like so many other, like literally every other equity, every other company, every other stock in the entire market is prey to consumption, to the level of consumption amongst just the American public, just the general public. Bitcoin is not. So I just wanted to throw that out there, you guys. That's why I'm very bullish on Bitcoin. And I've seen some of you ask this. I think Bitcoin is the most if people understand Bitcoin, which unfortunately not a lot of people do. We saw it fall today, so it is showing signs of correlation on the down days. If people actually understood Bitcoin should be doing well right now and not bad. Just because, again, it's an asset class of its own. It's like gold and stuff. But again, the dollar goes up, all other assets fall. So it makes sense. Finishing it off, earnings seasons continue. Wall Street also poured through the latest batch of corporate earnings for the previous quarter, including those of tech giant Microsoft. Broadly speaking, earnings season is coming in even better than expected, said Megan Horman, director of the portfolio strategy at Verdance Capital Advisors. The one thing is there have been some underlying concerns when you delve into some of the reports. Also, not a lot of companies are giving solid guidance. That would have been something more reassuring to investors. So this has been happening for the entirety of this pandemic, you guys. That no one's giving guidance because no one knows what's happening. We're in unprecedented times. Again, that's a very irritating cliche too, but it's true. We're in unnavigated waters. We're in uncharted waters, and that makes it so. It would be, it's unreasonable for these companies to give guidance because they don't know. They don't know what's going to happen. They can't lie to their investors. So that's understandable. Again, nothing new there. But we saw some companies impress today. Like just after hours, Ford, right before I started recording this, Ford impressed. Ford's up like 5% after hours. I know Overstock, we talk about that on the channel a lot, is up after hours as well, probably like 5%. They impressed on earnings. Microsoft did not. I think Boeing didn't, which, Boeing is just those poor guys at Boeing and just all airlines are just still hurting. I truly do feel bad for that industry. And shares of GE were up weirdly, but GE is a clobbered stock right now, so whatever. But anyway, we'll take a look at the earnings and then we'll just go straight into the charts and finish it off with some technicals, okay? So just to you guys can see this for yourself. Just type in markets insider earnings. Upcoming earnings if you guys want to see this for yourself. But just riffing off some names here, I already did it, but Apple, Amazon, Google, Facebook, Samsung, Comcast, Shopify is a huge one. It's going to be interesting to see how that works. American Tower Corp, Starbucks, Shell, Fidelity, Volkswagen. Look, Activision Blizzard, Airbus, Spotify, Vertex. My God, you guys. Newmont is going to be interesting to see how gold miners are doing right now. Scrolling down. Okay, Twitter, interesting as well. Look, all these are tomorrow. So we have an absolute floodgate opening tomorrow, and this is going to be huge. So I don't think I'm going to cover the earnings. I'll cover it in the newsletter. I don't think I'm going to make a video on these, but I will probably talk about these maybe on Friday or Saturday. I'll probably do this on Saturday in the Waves Weekly and just recap earnings with you guys. I might dedicate the whole episode to just recapping earnings. But tomorrow, huge day, you guys. Just be prepared, strap in, and let's hope for the best. Futures are looking promising, so let's hope those carry over. But again, we fell off a cliff so hard today that it wouldn't surprise me to see it bounce. Let's get into that. So speaking of falling off cliff, you guys can see here just this that is a teardrop right there. Look at that. That is a sad boy. That is a sad little candle. Again, you guys, it's not looking good here. Like, this is a short to medium term time frame. I would classify this area as from like June to July. It's not looking good. Okay, so we're seeing a lower high here. We weren't able to breach previous highs that we saw back in early September. That's not good. So a lower high, you could almost say this is like a double top pattern, and double tops are never good. Okay, so in terms of like what you could look at as in terms of trend lines, I don't know if any trend we broke. If you draw a trend line right here, we did break this morning. That's when you can see like almost it was thinking about bouncing off there, but once it dropped below, it absolutely went red. It went thick boy candle. So we are now below this line of support in the uptrend that we've seen since these March lows, which is that's not good, you guys. That's not good, and that is very bearish that we're below this line of support right now. If we do choose to fall, if we don't get word of stimulus, and trust me, you guys, I do think earnings, like, remember, you guys, fundamentals will always overtake technicals. And if we do get super strong earnings among the giants, especially because, again, the S&P 500 is so market cap weighted that if we see Apple and Amazon go up by like 5%, that'll completely pivot the S&P 500, okay? So Again, that's going to be very important, technicals aside, if we do see that. But if they don't do well on earnings, that's very, very bad for equities. And I think that up until the election, we will likely see a pullback. I think worst case scenario, but I wouldn't be surprised to see it, is that we see the S&P pull back to these levels that acted as a very significant line of both support and resistance. So you can see back here in 2019, we had a very hard time getting above the $300 level, okay? And the $300 level in the S&P, obviously a huge psychological, even any round number like that. I mean, it's about as round as numbers get at 300. So that's a huge psychological evil. Had acted as a significant ceiling prior to making its 2020 highs, or its highs going into 2020. And it would make sense. We saw it used as a line of support over here. It would make sense to me to see it come down to this area as a line of support once again, which would be a pretty significant correction. We're looking at another, I mean, like 10-ish% move down there. So that's not good. I'm optimistic, you guys. I'm staying optimistic. I was a bear for a long time, and I still do believe that we could see again this megaphone pattern is printing. And if we see this megaphone pattern play out, we're looking at a very, very significant, very bloody correction in the S&P. So for the good of many, I don't want this to happen. It's a possibility, you guys. So just be careful and remember that this is a possibility. Go watch the video where I talk about hedges, or subscribe to the portfolio. Appreciate that. But anyway, like just prepare yourself for the worst case scenario. Even a small position can go a long way when you're talking about hedges. That's a big reason that we saw, I think, the markets pull back today too, and the VIX do so well, which I'll get into right now, is because I think a lot of large institutions realized that they weren't covered, in the case that we see some heightened volatility come election, which is so obvious. It's so obvious. Again, I was ready for this to some extent, not by a crazy amount by any means, but you should always hedge your positions, no matter how bullish you may be. You should always hedge your positions to some extent, okay? And luckily, I was ready. Again, shout out to any of you guys who follow the newsletter portfolio, if you were ready to. But that's why we do this, okay? Is to be prepared for situations like this. Like the market throws curveballs all the time. You have to be prepared for those curveballs, so you don't freaking burn, so that your ship doesn't burn down, okay? Again, it's still, I wasn't green today by any means. I want to make that very clear, but I wasn't as red as I could have been, okay? And I'm thankful for that. So the VIX did break this shorter term downtrend. You can see back in March, obviously the VIX reached a high of 85. That's insane. Probably about as high as you'll ever see the VIX. Again, that was such a just that initial shock from COVID. It was such a crazy event that it's very unlikely we'll see that again. On the high side, I think we could retest previous highs here. Now, I mean, we're almost there. These highs that we saw back in June, almost there. Keep in mind, you guys, with the ETFs too, they do degrade over time. But still, if we see crazy volatility, the VIX can do extremely well. Okay, so again, VIX is actually looking good because it did break the short-term downtrend by like significantly. And I think we could see it move higher. And again, if going to the election, if earnings don't do well tomorrow, that's the primary catalyst, you guys. Earnings have to impress tomorrow, or else we will see the VIX go up and all equities likely go down, okay? But again, earnings are looking promising. Ford, Overstock, these guys are impressing on earnings. And I'm optimistic just because I don't want to be a pessimist, okay? The best way to say that. Okay, moving on to the DXY, we'll close it off here. So DXY, you guys remember, the dollar, when the dollar is up, that means that equities and assets, everything, gold, silver, Bitcoin, cryptocurrencies, are likely to weaken, okay? Because if you're holding these assets, then and things get scary and things start to fall significantly, like we saw, like drops in the S&P, the equity markets. If those are dropping significantly, people are going to want to exit their positions in that and go into the dollar because it's safer, okay? They don't want to be losing money. They don't want to be bleeding out. They're going to want the dollar. And vice versa, when the dollar's been going down, you can see the dollar, since these highs that we saw back in March, is inverse to the markets. So we saw that relief rally in the stock markets, but the dollar has been degrading, has been bleeding out ever since. And we are seeing the dollar gain it's definitely gaining some footing right around this $92, $93 region. And it's still not looking good. It's still not looking good. But I do think we could potentially see a short-term bounce in the dollar. How much, I don't know. I think it's a lot more likely just because it's this area where it's at right now has acted as such a significant ceiling for the dollar since back in early August that it's unlikely to be that we break above that. Because again, stimulus is inevitable. matter of if, not when, but it's coming, and people know that. People know stimulus is coming, and again, whoever ends up in office will just they don't want to cement a trash legacy. Okay, they're going to give the American people as much money as we need to be economically sound, and although that is very, very destructive for the economy long term and for the US dollar long term, more specifically, it needs to be done for the well-being of American citizens. Okay, and that comes, even though I'm in the markets, I do benefit from a degrading dollar, to be completely honest. I still want the dollar to be strong because all of my loved ones, all my family, friends, they have dollars. They're not investors like we are. Okay, we're fortunate, we're blessed to be in a position where we are very interested in this stuff, and this is like, we're aware. Okay, a lot of people aren't aware, and that's what you have to be thankful for, is that you're aware of what's going on economically, but a lot of people aren't. And if the dollar will ultimately degrade, but if people don't have enough money to do just regular things, that's way worse than freaking Bitcoin and stocks not going up. Okay, so we'll call it there, you guys. I hope you did appreciate that. I mean, hope you guys have a good holiday weekend. Again, gnarly day in the markets, you guys. But remember, like these things happen, and you got to get used to these things, and that's just part of the game. So appropriately timed, the markets are feeling very festive, super bloody out there. And again, let me know, I mean, how hurting you guys were today. Don't get specific with that, obviously. But again, that's the beauty of having community. The ups are great, the green days are awesome, but the red days are arguably even more important to cover, because you need people around. Okay, especially if, I know, like, days like today can wipe people out, especially if you have like call options positions and stuff. These are the types of days that can completely clean people out and really, really mess with your psyche and your emotional well-being. Okay, so if you're struggling, drop a comment. I got you. A lot of other people in this community got you too, and just remember that's super important to remember, that you have people around you who can help you through the bad times. And I mean, you can high five and cheers drinks on the good days as well. Okay, so drop a comment down below. Always love talking to you guys, always love learning from you guys, and until next time, always remember, take action, make waves. Peace.